Hi, guys. I hope you're having a wonderful time. Once again, another episode of Bullish Banter. We hope you enjoyed the last one where we covered a lot regarding trading psychology. Even though it was short, I hope you learned one or two things, and we still expect some questions from you. As usual, I'm your host, Jesse, and I'm joined by my fellow partner in the financial markets. How are you doing, Rufus?
I'm doing okay.
Yeah.
I think it has been a very interesting week with a lot of swings.
Yeah.
People expecting that the Fed will cut or hold interest rates, and now we are almost there. I think the D-Day is 20th of September.
Definitely. Now, before we fly away, yeah?
Yeah.
What's your thought on climate change in Africa?
I think it's a scam.
Okay. Well, we are off to a good start then. Okay, go ahead.
So, in terms of climate change,
Yeah.
the way I tend to view it is that we normally have climate changing over long durations of time. So there are some periods of time, let's say over a couple of decades, where general temperatures are rising, and there's periods when general temperatures are falling. So it's quite normal. But then the way it has been marketed, it's as if like we are going down to a definite end where the world would end, the planet would overheat, waters would overflow and fill cities. I think that is it's an overblown reaction.
Wow.
Yeah.
I mean, I've seen a lot of very strong opinions out of the just recent Africa Climate Summit.
Yes.
And there were some bold speeches, but what piqued my interest was the amount of billions which was agreed upon.
Yes.
That is number one.
Yeah.
Number two, which I didn't find quite making sense to me,
Yeah.
was that some of the ideas was for Kenya, perhaps, for example, or African countries,
Yes.
to stop importing fossil fuel machinery,
Yes.
which doesn't make sense. If we are to grow, we need to produce at a very low cost. And I think, I don't think electric energy, to say the least, can support the development we want to do, especially in manufacturing.
Yeah.
We are net importers, so definitely we need some degree of balance between.
The thing is, there is no single economy that has ever developed without having cheap energy.
Yeah.
So any economy that you're seeing in the developed world, be it the US, Germany, France, the first thing they had to solve is make sure they have cheap energy.
Yeah.
And at that period of time, it didn't matter whether it was a fossil fuel, whether it was nuclear, it just had to be cheap energy.
Now, the third point of which piqued my mind was when some of the talk was less about climate change and more about how do we restructure the debts that Kenya owes to the different nations.
Yes.
So I think it has been a recurring topic among them.
Yeah.
And I just think they should just call it debt restructuring summits because most of the debt now have been sort of cancelled, and any alleged debt repayment to go to climate-oriented activities, hydrogen power,
Yes.
geothermal power, hydroelectric production, maybe solar panel farms, wind farms, something like that. So I'm torn between, yes, it's good to protect the environment.
Yes.
But like you said, we need to actually be producing to some degree, let's say 60% with cheap fuel and less burden on Kenyans in repaying these debts.
Yes, we absolutely need to have cheap fuel. But then from the current trend we have been seeing with the ESG policies, you're able to claim what we call carbon credits when you do something that contributes positively to the climate. So if you do something that reduces the production or emission of greenhouse gases, you're able to claim those credits. And I think it's a very smart move by our current president.
Yeah, about that.
Yeah.
Go ahead.
So looking at the immediate danger that we are facing, which is basically the Eurobond payment that is due in June next year, we currently have a shortage of dollars. The government doesn't have a lot of dollars to guarantee that we'll be able to pay that debt. So in order to get prepared to that eventuality, the president has been pushing a couple of limits, be it expanding the tax base, but then the low-hanging fruit seemed to be the climate change, these credits, where we have a lot of green energy production and we can claim those credits. We have a lot of forestry, and we can basically improve, plant trees, then claim those credits, sell them in a secondary market. Then we'd have a lot of dollars that would help us service our debt.
Now, I look at a job opportunity here.
Yes.
How will we audit that this person is actually not emitting the carbons? So I'm thinking they perhaps have some auditors who look for companies which comply with these ESGs and then do that. But another point is this, most of these are targeted toward SMEs, and SMEs are basically, the mama mbogas and everyone who are doing their small businesses to produce maybe food, to deliver, and they will either need they cannot use electric motorcycle. I think we have had this debate locally.
Yes.
It is not sustainable and it's quite expensive, especially electricity as it is expensive.
Yes.
So these SMEs would be better off having that cheap fuel, grow their business, grow their turnover cash monthly, so that by the time maybe they have picked up, they are now not a growing enterprise, they can be able to now adopt those sustainable measures at a point in which the company can sustain the cost of electric energy or something like that. So I tend to agree, but also tend to not want to rubbish it. I want to see how they implement all those billions of dollars which were signed and left apparently in Kenya.
So the thing is, on the short run, we're able to claim out of carbon credits because we have not been claiming before.
Yeah.
So you can say this is how much we have been doing, and that basically creates out of immediate dollars for the country. The long run is very bad for the average Kenyan. We will get the other side of the ESG policies, where let's say your mama or your grandma uses fuel, uses, let's say, firewood to cook. So if it gets to a certain point where they say burning firewood is causing emissions in the climate, then they will be forced to stop using firewood. They will be forced to stop using charcoal. And maybe they will be pushed to use something greener. Maybe they will be forced to use electricity. I saw the recent comment, this guy is saying that with 20 shillings of electricity, you can cook githeri. You remember that that news?
Impossible.
Yeah. So if they are pushing us towards that side, where you'll be forced to either use electricity or maybe LPG, then in that case, you'll find that a majority of these people who are basically, let's say, growing their own firewood and using it to cook, now they have to buy the fuel. And on top of that, they have to pay a tax on that fuel, including a carbon credit tax. So the overall burden will eventually be taken by the average Kenyan. And I don't think it looks good on the long run.
Yeah. Staying with the LPG, I think right now inflation in Kenya is down to like 6.3% based on the latest CBK reading. And LPG generally, I think if you speak to a lot of people, the price has gone down significantly. So I believe that is contributing to that. I would like to see how it fares at least within the next 1 year.
Let me surprise you. Within the next 1 year, after signing all those agreements you saw during the press conference, those LPG consumptions will be deemed as producing more greenhouse gases. And as a result of that, they will attract a tax. So we will be paying an extra tax on that.
Interesting. So it's let's say like what is it? Like you are just on a spinning wheel, eh?
Yes.
You are not going anywhere, repeating the same thing, hoping different results, queuing the same thing. At the end of it, you get another problem of the same stature, I guess. Now, price of oil up back to $90. I think August we closed with the highest price appreciation for that.
Yeah.
And I think all the data we have gotten last month, the US strategic reserve, extension of Saudi cutting their fuel, all indication is pointing to oil going back to 120.
Yeah, reminds me of Thanos.
Okay.
He basically snapped it.
Okay.
So when Saudi Arabia earlier in the week announced extra, that was 1 million barrels per day oil output cut. They extended this by 3 months through to December. Then Russia came in, added 300,000 barrels per day oil output cut through to December. It's basically saying that oil prices are not going down. If you've been observing the prices they've been supporting since we had $72 per barrel. So every time price goes up, if there's something showing that the price is going back downwards, they come up with an extra announcement and they keep cutting the oil output. So with a very scarce oil output, they maintain oil at high prices. And that basically means that everything the Western central banks have been doing to make sure inflation is going down will be reversed by high or expensive oil.
Yeah, interesting. You remember when you talked about the stocks to look at? I still believe this is another win for the ExxonMobil, the Chevron, the
Yes,
Aramco.
Occidental, all of them are going back up.
I think they'll be leading the Santa rally come December when at least the Western countries go to winter. I think they'll be the one closing the year with the sort of similar performance to Nvidia. Now, my concern is this. You see, it has been like a, how do I put it, Russian roulette.
Yeah.
US fails to restock their reserve. The Saudis cut their production. They fail to restock. They cut their production. Don't you think it will reach a point whereby all these very aggressive measures, one must fall?
Yes.
I'm not sure who, but one of them must fall because the alleged demand and growth of China, which was supposed to maybe spread all over the world, the deflationary economic performance.
Yeah.
Will spread all over the world. Clearly, it is not going anywhere. It is only in China.
But China is stimulating now. After realizing that the recovery failed, they're basically stimulating. On one side, we had tax cuts being implemented in China. They have cut interest rates 3 times this year. And all these is being done by China to try and stimulate growth. So while currently we are not seeing the growth, in the next couple of months, we should be seeing China making a strong recovery.
Okay. Do you think maybe when, let's say they make a strong recovery, that would be manufacture-wise, will that continue the demand for oil and therefore higher prices, or they'll have to negotiate it at a certain price, especially after the BRICS summit where they have added like a couple of countries which are major producers of oil and they are looking to do some deals together. So as a trader, would you be looking at a higher price or maybe a correction before that spike up?
What has been happening with China, they don't normally buy oil from the open market. They do longer-term bilateral agreements. So the most recent ones were with Iran. And once they get these bilateral agreements, it affects production. So if the production capacity of a certain country is, let's say, 2 million barrels per day, and 1 million barrels per day is going to China, then the remaining amount is way smaller, which basically affects the supply for the rest of the market.
Okay. So you mean the rest will have to pay whatever price is set? Okay, interesting.
No, they will pay the market price, but the supply will be constricted because a lot of oil has gone to China based on higher demand.
I'm asking because I'm really invested in oil. I think that was my best performing asset in August.
Over the last 2 years, the best performing sectors in 2021, 2022 was oil.
Yeah, and not oil, even the companies. Just last month only, that was one of the best months. You could sometimes do something, you forget your other position, you come back, you see like blues until you want, okay, what has happened?
Yes.
If you open X, Saudi Arabia spoke, Russia followed just a second later, Iran and the rest. Now, BRIC summit,
yes,
they added all these countries. And one of the most interesting statements that came from the BRIC summit was by Brazilian President Lula.
Yeah.
He said that their objective is not to compete against US, and that should not be their fight, but rather how do they bring all these synergy of production, currency, maybe lending against to each other, and more importantly, setting policies that de-dollarize their trade agreements.
Yeah.
And I think when Bernard said that you should pay attention to that, I think I'm getting convinced they are now acting like reality. It is not becoming like a standing up against the other person, but rather just channeling a different path to their development agenda and trying the best they can to do it without being dependent on a weaponized currency.
Yeah. About the new countries that were invited to join the BRICS, they are yet to confirm, and that might take some time, maybe 2024 through 2025. So it's not official yet. But then for the moves to try and de-dollarize, I think that is very much active because over the last, I would say 1.5 years, the US has completely weaponized the dollar. So the current shortage we are seeing here in Kenya is being felt globally, especially for the economies in the global south. So we saw the Argentinian peso collapsing because they don't have enough dollars. They can't repay their debts. So a lot of economies are going through the same thing. So if you're part of the BRICS, you have an option. So in this case, if you want an urgent loan, you don't have to go to the World Bank, the IMF. You can get a direct loan from the BRICS Development Bank. Yes.
What is interesting, and I think it was yesterday when it was announced that Iran and Saudi Arabia have opened their embassies.
Yeah.
And you said that maybe they'll be joined sometime 2024. I think that embassy opening between those two countries,
Yes.
which has existed for the longest time,
Yeah.
might not be the best news for Biden as he heads into the re-election campaign, if at all he will be running.
Yes, that's bad news.
It's bad news. And the way the price is going up, commentaries on X are saying he might run the SPR dry just to make sure that inflation remains below maybe 4%.
Yeah.
And then after election, now they can buy at whatever price and maybe just suffer the consequences of whatever high inflation or the high gasoline price that is at least not fell at the moment there.
Yeah.
So it would be interesting to see how the Republican or the other candidates against Biden fare it out, because I know as we go towards the nomination and debates, I think we should have a very hot debate, particularly on all these BRICS coming about.
Yeah.
U.S. participation, at least in the G20, and overall general global, development. Let's say Russia and G20, which are going to G20, they are not going. Russia and China have said they are not participating just after doing the BRICS summit. It will be a very interesting year, 2024. Yeah. What is your view on how the markets will react after all these scenarios, especially with, let's say, we close the year with oil above, let's say, $100 a barrel?
Well, on one side, we know that it's a 4-year cycle. So in most cases, when the US is headed to an election, we normally see the stock market making a big momentum upwards. So right now, we are seeing the Fed almost reaching the peak of the interest rates. And this basically signals a potential pivot mid-next year. So a pivot would basically mean the Fed cutting interest rates, the US printing more money, which would basically prop up the stock market. And we could be seeing some very good asset bubbles happening towards the election in November.
Yesterday, we had a bloodbath in the markets. I think the last couple of days, the tech stocks are significantly getting a beating, starting by NVIDIA, which I think we have addressed that it's almost reaching its peak.
Actually, there's a scandal brewing in NVIDIA.
Yeah, I've seen it. I'm waiting to see how it unfolds, because that would be major.
There's these allegations that their biggest customer, a company called CoreWeave, has been manipulating demand for NVIDIA products. So this company is basically funded by NVIDIA itself and BlackRock. So it raised billions of dollars from BlackRock and NVIDIA, then used that money to buy products from NVIDIA. So it's more or less like the FTX scandal.
Interesting.
So it's getting wider and wider, and people are starting to make a big sell-off on NVIDIA.
I would not be worried about that. BlackRock is BlackRock. I would want to see how that unfolds. But I think their biggest threat is the 7 nanometer chip made by the SMIC Huawei, which probably is what US wanted to do with their CHIPS Act or the Inflation Reduction Act. And coupled up with the banning of China officials from using iPhones within workplaces, because clearly they said work duties, not at home. But I know by the time you move away from, of course, using iPhone generally for work, you might not particularly go on to use it anywhere else.
Today they announced they're expanding it to government departments and agencies.
Okay. So
now it's big.
That will be around 20% of sales, net sales, of their revenue book. And that is just 1 week away from iPhone 15.
Yes.
Now, Apple rather yesterday had a 3.5% drop. For context to the listeners, that would be 6th of September. 3.5 drop yesterday just on that announcement.
Yeah.
Definitely today might be another one. Now, I think they are facing similar beatings from maybe companies like NVIDIA. Why I say so?
Yeah.
Allegedly, they are going to comply with the EU rules of Type-C charger.
Yes.
So the uniqueness in the market is going off.
Yeah.
And you remember when I told you this, like the way they are launching new products without, let's say, proper, consultation with the market or competition, it is limiting their ability to adapt to changes in how consumers, let's say, use their products. Because if it is fastest chip, Huawei is ahead at the moment. If it is the market...
Huawei doesn't have the fastest.
The 7 nanometer?
Yeah, like Apple has a 2 nanometer chip. The thing is, for a long time, the US has maintained a monopoly in microchip development technology.
Okay.
So for China to create any kind of microchip for any of their devices, including AI products, they've had to outsource either from American companies or from Europe, but majority has been from the US. So by US maintaining that monopoly, they've been able to control tech. And if you look at the top performing tech companies for the last 10 years, majority of them are American companies. So the breakthrough with the semiconductor company in China and Huawei is that they were able to source all the materials, the tech locally, and develop a 7 nanometer microprocessor. So after making that breakthrough, which was not even announced, people just saw a new phone. They did the reverse engineering to try and understand the chip. And that's when they realized, this is a 7 nanometer microchip. So when they realized that China can now do it for themselves, it's only a couple of months or even a couple of years before China is at the very top competing with the US. So that's why there's a very big shock in the US semiconductor industry that China is now matching up.
Okay.
Yeah.
I would expect with the ban on iPhone sales to have a significant impact on their price, of course, their share price.
Yes.
And obviously dampen their launch of the new one, which I'm quite excited to see what it will do, given you realize that from the early on in the year, there has been maybe a slow pickup on some of the AR glasses, which I think should be in sales maybe in a month or so globally. There has been maybe a dampened outlook of it, at least within the tech space. Are you worried maybe they are in a sort of a stagflation? Like ideas have become so good, I mean, based on their previous products, that it is becoming too hard to beat their best products that they have launched before?
Yeah, I think that has been a consistent challenge with Apple, especially with the iPhone products. But I don't know what they have in terms of the new features they are releasing this week.
Not this week. I think it's Tuesday or Monday, 12th of September.
Yeah, next week.
Yeah. Remember when Microsoft, before the Windows 8, just before MacBook came with, I think it was M1, and they obliterated Microsoft and Windows off the market totally. Now, I think they're in such a scenario whereby you have this exclusivity in almost all firms and every tech file. But now your ideas are so good, but the price is quite above everyone's expendable income, coupled up with inflation and everything else, that it is affecting your sales revenue. And now with governments, let's say with the restrictions of the App Store, you feel like they are also chasing away people from their innovative space, especially within the cryptography and all these other emerging fintech companies.
Yeah, it's a trade-off where, yes, you cannot access certain apps over the internet, but on the other hand, you also get the benefit of being part of the Apple cult, getting all the privacy protections that you get with Apple. So I think it's always a trade-off. But from what Warren Buffett keeps saying, Apple is a cult. The moment you feel like they have outdone themselves, you feel like the newest iPhone will not pick, guys will just buy that iPhone like crazy.
I mean, to the good news, so that people don't assume I'm bashing them.
Yeah.
They are looking or thinking about acquiring ESPN, and
Yeah.
Messi is literally the face of MLS now. So I think with Messi there, with the almost 350 million plus reach,
Yeah.
nobody's coming close to you.
The problem with mergers is that they just remain a rumor until they are confirmed.
Yeah.
For instance, the former CEO of Walt Disney was just reinstated. I think his name is Igor.
Bob Iger.
Yeah. And now people are speculating that there is a high likelihood that Apple would acquire Walt Disney. So it's still a rumor until it's officially confirmed.
Is it acquiring or, let's say, licensing some of the Disney products to Apple TV?
No, it's acquiring. The company is worth about $150 billion. Apple is worth what? Almost, is it 2 trillion?
Yeah. Market cap is 2 trillion.
Yeah. So acquiring would be much simpler.
Yeah, basically.
Yeah. And
Yeah,
it would be one of the oldest media companies with over 100 years experience in the industry.
But that makes sense. I think it was recently when KKR, one of the largest and oldest hedge fund managers, acquired Simon and Schuster.
Yeah.
And I think that was a good acquisition to their portfolio of a lot of companies. So if Apple does actually do that, I think that can go ahead in terms of doing it. I think bottom line for me is it would be interesting to see how the Chinese ban and losing over 1 billion, let's say, customers.
Yes.
Would be.
Yeah.
And I think what some of the reports coming is that in case they uproot their production from China, then there will be a significant state tariffs on some of their products or sourcing of product from China, be it labor, if they are planning indeed to go to India, which is another 1 billion plus population. So they are, in terms of marketplace, I think they still have a chance, but losing them can be, of course, detrimental, at least in the short run.
Yeah, there's also a positive to this, where you see, whenever there's this US-China trade fights, or trade war, eventually they tend to find an agreement, a middle space. So the middle space would probably open up the Chinese market for Apple products, but then Huawei would also be allowed to sell its products in the US and the West.
And I think also India have their own phones, so there will be a stiff competition internally, especially given Indians are mostly not to profile, but are very savvy tech and programmers. And
India, I think they are pro-West because they're getting out of employment opportunities.
Actually, a correction.
And out of industries are moving to India.
A correction. India is currently going back to the original name, Bharat.
Yes, I saw that. Bharat.
Yes. I am interested to see how that Bharat name goes about. Interesting name, I know. And so if they're doubling to both sides, how do you think that will play along, at least with their BRICS colleague?
Well, India, basically, we know that it belongs to the East. Okay?
Geographically.
Yes. But then also in terms of the way how their culture is, all points to the East. What we normally see is that in terms of tech advancement, India has created out of collaboration with the West. So this collaboration happens in terms of tech. We know that Elon Musk is opening a mega factory in India. Apple has shifted its iPhone production to India, and it's accelerating now. I think it's at 5%. And this deindustrialization of the West is benefiting the countries in the East. So I think it will be a competition between China, India, Japan, and other countries in the East.
Yeah. Just to finish with the East, there was a report that Japanese are buying a lot of gold in terms of to cushion them against inflation and weakening Japanese yen.
Yeah.
And I think it is now at a record where gold to Japanese yen it's at its lowest.
Yes.
But gold, at least again, the gold itself, it's quite low. I think right now it's around $19-20 something an ounce.
Yeah.
What do you make of that?
I think it's only temporary for gold. Well, the US has really weaponized the dollar and made it so strong against other currencies. Today, being Thursday, we are on course to complete an 8-week bull run for the dollar index. So with the dollar index strengthening, everything else tends to weaken against the dollar. So at some point, we know that the Fed will stop with this nonsense of hiking rates every time. at some point it will be so toxic for the economy, they will be forced to cut interest rates. It's already starting to hurt the real estate, consumer spending, and all that. So when it happens, and I believe this should be in maybe Q1 2024, when it happens, this is when you start seeing the hard assets start to rally. So while hard assets like oil have not been strengthening, we have seen the Saudi Arabia and OPEC countries manipulate supply to push prices higher. But then when this happens with the US, it will be more of a flight for safety. So if you've been holding your money in, let's say, NVIDIA, Microsoft, and those stocks are completely overpriced, at some point when they start pulling back, people will be looking for safety. And in that case, the hard asset might include gold, oil, among other hard commodities.
Yeah. Now back home, recently I think should be launching towards the end of this month or already going on, the introduction of the two indices. Is it 2 or 3? The NASI 10, tracking the top 10 companies in Kenya. And then there is another one which is tracking the bonds markets in Kenya. And I think the T-bills. Quite innovative, I suppose. What is your view on it?
I don't know how to explain it. It's like buying a really old house and then painting it. On the outside, you know that it looks better, but on the inside, it's still structurally weak. So unless we change the fundamentals that are influencing the performance of these assets, you're not really doing anything by reframing how you invest in them. So whether you make it the NSE 10, NSE 20, or whatever number that is, investors will look beyond that thing. They will go deeper, and by deeper, they will look at the companies behind the index, and then they will try to project how these companies will perform. So far, it's not looking good. I think in the economy, it's only the banking sector that has been benefiting from the high interest rate environment. The rest of the economy is not doing well, especially the companies listed in the NSE.
Yeah, there's a report that came out, I think today is Business Daily, whereby banks which have investment brokerages are the ones which made a lot of money.
Yeah.
So, you could find equity and the rest. Yeah. But if you compare it to the rest of the industry, they are basically under the water.
Yeah.
So I agree with you. My worry, I'm a vested, interested party there, but you find even myself pick maybe 1 or 2 and you put all your eggs in there, your golden eggs, and you hope they lay more golden eggs, even though they are small golden eggs, at least they are golden.
Yeah.
But the sector itself, I think, is really wanting, to say the least, because if the top NASI 10 are only maybe 2 insurance companies, what about the other companies, And I think I saw a complaint earlier that why is it that despite Kenya being the 5th stock exchange in Africa, the participation rate of locals is, let's say, less than 30%. But if you go to the other top 5, most of it are the locals who are participating. So it is a healthy and vibrant economy. The return in Kenya is, I think, the figures were at least a negative, I think, 40% returns. But if you compare to the others, they are doing plus, I think, 20-something over the last 20 years, not just this year.
Yeah.
So it tells a lot that even, I agree with you, buying a new house, painting it, but really nothing has changed, even with the ESG talk within Kenya. I don't think we need that. I think we just need companies which have less tentacles from the government and more participation from the real investors. And
if you look at the top companies in the Nairobi Securities Exchange, it's either a company where the government has a very big stake or a foreign company has a very big stake. So we know that the dominant investors in that market is the government and foreign companies. So as a result of that, there's a lot of manipulation coming from the interactions of demand and supply between the two entities. So on one side, for government, it's about policies. Government can easily pass a policy that would, let's say, affect Kenya Power. Let's say it's trying to lower electricity prices, and that would be negative for the investors. On the other hand, for foreigners, they will be looking at these policies being passed by the government. We'll be looking at the performance of the economy, make projections. For instance, we saw during the election period, the foreigners putting out their money. Stock market goes down, then they buy back in at lower prices. There's a lot of manipulation happening around, which kind of scares the locals from investing in that.
Is it manipulation or a lack of literacy to understand that they could invest? Because there is that aspect as well. Even we can say manipulation, right?
Yeah.
But hardly, I mean, you have to be patient enough to operate the trader platform and actually understand the procedures, let's say depositing, withdrawing, what are the costs, what are the taxation that you will incur, all those account types that you do it. But if you want to get a share of Chevron today, Apple today, it's as easy as few clicks. So for me, I think there are two factors here. Less government manipulation. There is the issue of literacy, understanding that you could actually invest in this.
Actually,
and two,
a lot of Kenyans know about stocks. The only problem is, for instance, NSE data is not readily available on the internet.
Actually, you have to pay for it.
Yes, you have to buy data. You see how bogus that can be. Like they're trying to market these products so that people can participate in trading them, but the data is for sale. Yeah, it's really bad. It's only recently that I saw a couple of companies listed on TradingView. So.
And you actually have to subscribe to Premium TradingView to get it.
Yes.
Which is another obstacle.
Still another obstacle.
Okay.
So you want to trade, let's say, Apple shares. You can just Google Apple shares. You'll see the real-time price, the data about it. You can sign up with FXPesa, get to the app, buy those shares directly. There are no limitations.
Okay.
But for you to buy a Kenyan stock, the first limitation, CDSC account. Most people don't even know what a CDSC account is.
Do you think maybe there has been this talk about exchanges, maybe African exchange? I think recently they launched the African bond market or something.
Yeah,
which I think
they have this interconnected exchange that is linking different exchanges within Africa. So if you're an investor, you're able to access all these companies from one platform. So I think it's a really good move. But tech-wise, we need to move it way faster and get to the level of derivatives, options, futures, and all that.
I think the derivatives market is on at the moment.
But it's not available on MT4, MT5, TradingView.
Yeah,
and those are the modern apps.
Yeah, for a country known as the Silicon Valley of Africa.
Yes.
We might want to retract back that name and actually do something about the fintech space, because talking of fintech, there has been a lot of developments within the fintech, but they, of course, focus on either mobile money loan. I think that is the definition of fintech, at least in this Silicon Savannah, right?
Yes.
I think one of the, there are already existing stable trading platforms. I think there is no need to reinvent the wheel. But I think they could at least assist the boss to have, the Nairobi security boss, to have a better tech that is not only secure, accurate, and obviously, but the data is also, verifiable.
Yes.
And more importantly, the usability is quite easy for you to go about it, because I know there are a lot of, you yourself do a lot of these educations, but I'm sure you find yourself trying to find the financial year report of, let's say, KCB Bank, 2006.
Yes.
You can either go, I think when I was doing my research on it during my campus days, I had to go to CBK, get their filing reports, pay some amount of money. I'm not sure if they do charge now, and then get it. So because you wanted for you to have a quality data at least 10 plus years so that you can do your analysis. And it was very hard. So when you are an investor, you don't have that time. You want, you see, today they have announced their H1 results, good performance, good dividend earnings, their loan book ratio is, their balance sheet is good, their profit is excellent. But for you to go about it, you might have to wait for like 2 hours, maybe, or even 2 days, T plus 2 or 3, for you to settle it into your account. If they do actually get to a level where you can invest in the derivatives, it makes it easier. You have both options. You can go to the long-term physical acquisition or cash equities, while also doubling on the derivative side. you take advantage of that short spike due to the good news. We saw last month when the Nvidia was releasing their results, you could see the price go up by almost 5%, and that was, I mean, for those who deal in short selling, buying and selling at least within short period of time, they're actually able to take advantage of that, which I think is something. Hopefully in the future we can have it.
I agree. We are way behind in terms of fintech for investment products in Kenya. Until we catch up, we are not going to be a serious competitor in the market.
Okay.
So if a Kenyan investor who I believe is very educated, has access to real-time internet, knows they have the option to invest in a company like Tesla, they can go for Apple, Nvidia, and so on, where information is very public, regulation is clean, reporting is really good. When they compare that opportunity with going for a company that fast has not been performing well since 2014. The entire market has been bearish since 2014. When you compare those two possibilities, it doesn't really look rosy. So on top of that, there is also the issue of reporting. So financial records in Kenya are reported after every 6 months. If you look at the global standard, it's 3 months.
Yeah, if you're quarterly.
If you're looking at quarterly earnings report, you're able to know how a company is doing every 3 months, which allows you the opportunity to react in time before so much happens within that company.
Yeah, I think that's a good way to close it, because sometimes, I mean, I know only a few which perform well and they are in a specific subsector.
Yeah.
So if at all something happens to that subsector, you are under the water.
Yes.
I think that is quite something that, should be looked at. And finally, for myself, I think most banks, of course, being a business, getting involved with bonds is good. I understand for security of your deposit is good, but it is not a sustainable model should the government reach a point where they are in distress and they are just like, nope, we'll not do this like what Ghana did. And that can be very dangerous to the economy, especially what we saw earlier on in the year with the SBGs.
Remember what happened with Italy?
Yeah.
When they slapped a big windfall tax on banking profits.
Bas.
Yeah. So the problem is for a majority of sub-Saharan Africa, when we are in this cycle where central banks are hiking interest rates, it's always the banking sector that is making out of money, which is kind of a voucher-like behavior within their economies. So while investing tends to be amoral and you can make some good returns from banking, I think we need complete restructuring of how banks behave when we are on a rate hiking cycle.
Yeah, it limits innovation space, because if any SME would like to scale up, they cannot get the capital, and the cost of it is quite above the standard that could allow you to run your business sustainably. Yeah, I think that has been a good conversation. I hope from where we started to climate to back home.
Yeah, that was a good round.
Yeah. Should you have any question, of course, we expect to answer them in the next episode. Other than that, any closing remarks from yourself?
My closing remarks for anyone who is listening to this podcast, if you have any questions, feel free to raise them in the comment section or on our social media channels. And of course, if you're considering investing between, let's say, offshore stocks in the US versus Kenyan stocks, as I always say, if you decide to eat a toad, eat the juiciest.
Yeah. Now I have a question before we go. Yeah, Chelsea, are you bullish or bearish?
We are in accumulation zone.
Yeah.
So we can't go lower than this. So the only direction is up.
Okay.
Yeah.
I hope so. Are you following the Rugby World Cup? It's about to start in a...
Yeah. No, I'm not following that. I'm following the club with a lot of criminals. Don't say which.
All right, guys, have a good day wherever you are. I hope you have learned one or two things. I've been your host, Jesse. Adios.